Hello everyone, and welcome to another episode of your Quick Money podcast. Today, we rate kicking off 2026 with a look at how the stock market started the new year on January 2nd. It is a great time to recap the day's action and think about what it might mean for everyday investors like you and me. Let's start with the major indexes. The Dow Jones Industrial Average climbed about 0.7%, and the S&P 500 edged up 0.2%, both snapping four-session losing streaks. The Nasdaq, however, dipped fractionally lower, extending its skid to 5 sessions. Overall, it was a mostly positive start to the year, with stocks shaking off some holiday week weakness. What drove the gains? Boeing led the charge, jumping nearly 5% and powering the Dow higher, along with big moves from Caterpillar and Goldman Sachs. On the tech side, Baidu's US listed shares soared 15% after its AI chip unit filed for a Hong Kong IPO. Micron Technology surged 10%, continuing its massive run from 2025. Intel and Nvidia also posted solid gains. And in the consumer space, furniture stocks like RH, Wayfair, and Williams-Sonoma rallied 5 to 10% after President Trump delayed tariff increases on imported furniture until 2027. Not everything was up, though. Tesla shares fell about 6% after reporting fourth quarter deliveries that missed estimates, down 16% year-over-year. This dragged on the consumer discretionary sector. Berkshire Hathaway also slipped more than 1%, amid ongoing attention to its leadership transition. Shifting to the bigger picture for 2026, economists are watching a few key areas that could impact your personal finances. Inflation might stay stubborn, potentially remaining above the Fed's 2% target due to factors like tariffs and wage pressures. On the bright side, the job market is expected to improve, with unemployment around 4.4% and steady monthly job additions. Housing remains a challenge. High costs and limited supply mean affordability is tough. Even with potential reforms promising lower mortgage payments, student loans are seeing big changes too. New limits on Parent Plus and Grad Plus loans starting mid-2026, which could affect borrowing options for families and grad students. And for retirement planning, reports show less than half of Americans are on track to maintain their lifestyles post-work. Many Social Security recipients are working longer because benefits haven't kept up with inflation, and hardship withdrawals from retirement accounts are rising amid emergencies. So, what does this all mean for you? A positive market open is encouraging, but volatility from policies like tariffs could create opportunities or risks in sectors like tech, AI, and consumer goods. For beginners, focus on basics, build emergency savings, diversify if you're investing, and stay informed on changes to loans or housing. Remember, events like company spin-offs or delivery reports can highlight growth areas like AI-driven demand. That's our quick recap for January 2nd, 2026. Markets are off to a mixed but mostly upbeat start. Keep an eye on those economic trends throughout the year. Thanks for listening. If you enjoyed this, subscribe for more bite-sized money insights. And as always, this is for educational purposes only, not financial advice. Consult a professional for your personal situation. See you in the next episode.